Last episode, we did a company that isn't even public yet. This one's the opposite problem. A company that's been quietly public for a while, growing fast, and then 6 weeks ago basically doubled itself overnight.
This is Kraken Robotics, ticker KRKNF if you're trading it in the US on the OTC market, or PNG if you're up in Canada on the TSX Venture Exchange. And doubled itself overnight is not an exaggeration. We'll get into exactly what happened.
Welcome back to Order Flow, the show that breaks down the signals that actually move markets. Insider buying, institutional flow, and the milestones that separate story stocks from real businesses. I'm Matt.
And I'm Ryan. Standard disclaimer, this content is for informational and entertainment purposes only, not financial advice. The hosts may hold positions in the securities discussed now or in the future. Always do your own research and consult a licensed financial advisor before making investment decisions.
Okay, so who is Kraken Robotics before we get into the big acquisition?
Kraken is a Canadian marine technology company. They build the sensors and systems that let you actually see and operate underwater synthetic aperture sonar for high-resolution imaging, subsea batteries, navigation, and positioning systems. Their customers split across 3 buckets: defense, offshore energy, and ocean science.
And it's what's called dual-use technology. The same sonar system that helps a Navy hunt for underwater mines can go into a robot inspecting an offshore wind farm's cables. Same core tech, different customer.
Right, and this was already a fast-growing company on its own. In Q1 2026, reported back in May, revenue was up 35% year-over-year to $21.7 million. Product revenue, the higher-margin stuff, batteries and sonar, was up 50%.
So that's the before picture. Now here's the after. On July 2nd of this year, Kraken closed an acquisition of a UK company called Covelya Group for about $615 million Canadian dollars.
For context, Kraken's entire 2025 revenue was $102 million. They just bought a company for more than 6 times that.
Covelya Group is the parent of several well-known names in underwater technology: Sonardyne, EIVA, Forces, Voies, and Chelsea Technologies. Sonardyne in particular has decades of credibility in naval sonar, mostly in the UK and Europe.
So think of it this way. Some of the companies that used to be Kraken's competitors or at least sat in the same market are now literally part of Kraken. This is a consolidation play, buying your way into a much bigger piece of the underwater tech market all at once.
Let's talk about how they paid for it, because this matters a lot for the bear case later. The $615 million was about $480 million in cash and $135 million in stock. Just under 16 million new Kraken shares issued to Covelya's former owner.
The cash came from a $402.5 million stock offering that closed back in March, plus a new $125 million credit facility they drew down in full. So it wasn't a last-minute scramble, this was planned and pre-funded. But it does mean new shares got issued and new debt got taken on.
Right, and here's the number that really tells the story: Kraken's updated guidance for all of 2026, issued the day the deal closed. Revenue guidance jumped from $165 to $175 million standalone, to $290 to $320 million combined with Covelya.
That's essentially a triple in one guidance update in one press release.
And this is worth sitting with. The adjusted EBITDA margin guidance actually ticked down slightly. It was 24 to 29% standalone, and now it's 22 to 23% combined. So revenue exploded, but profitability as a percentage didn't come along for the ride, at least not yet.
Management says they're targeting $10 million of cost synergies within 24 months, and they expect the deal to meaningfully boost earnings per share in 2027 once those synergies show up. But that's a promise about the future, not a result you can see in the numbers today.
All right, bull case. Point 1, obviously, this triples the size of the business in a single transaction and instantly diversifies it geographically, adding deep UK and European defense relationships Kraken didn't have at this scale before.
Point 2, the deal was funded responsibly for its size. A dedicated capital raise, a real credit facility, not some desperate financing scramble. Management says the balance sheet remains strong with minimal net debt even after all this.
Point 3, momentum kept building after the deal closed. not just before it. As of late July, combined 2026 announced product orders were up to $327 million, climbing from where they were even at the closing announcement a few weeks earlier.
Point 4, the product mix is shifting toward higher margin, more scalable revenue. Product sales are guided to be more than 75% of total revenue in 2026 versus a services-heavier mix historically.
Point 5, there's a concrete plan to move up from the TSX Venture Exchange to the senior Toronto Stock Exchange by year-end 2026 or early 2027. That could open the stock up to a lot more institutional buyers who simply aren't allowed to hold TSX Venture names.
Point 6, the standalone business was already accelerating before any of this. 35% revenue growth in Q1, on its own, is a strong number for a company this size.
And point 7, analysts have reacted positively. Scotiabank raised its price target from $6 Canadian to $9 Canadian after the deal closed.
Okay, bear case. And there's real substance here because this genuinely is a big, complicated integration.
Bear point 1, the big one, Kraken just bought a company potentially bigger than itself. Integrating an organization that size is hard. Culture, systems, people, customers. A lot can go sideways, even with the best intentions.
Bear point 2, that margin dip we mentioned. Guided adjusted EBITDA margin actually went down slightly with Covelya folded in, from a 24 to 29% standalone range to 22 to 23% combined. The deal grows revenue a lot, but it's not obviously margin accretive in year one.
Bear point 3, real dilution already happened. Almost 16 million new shares went to Covelya's former owner, on top of all the shares issued in the $402.5 million capital raise. Existing shareholders now own a smaller piece of a bigger company. The bet is that the bigger piece is worth more, but that's not guaranteed.
Bear point 4, Covelya's former owner still holds about 4% of Kraken. It's locked up, but it releases in thirds at the 12, 18, and 24-month marks after closing. That's a known, scheduled source of potential selling pressure sitting out there on the calendar.
Bear point 5, leadership churn, right in the middle of the integration. The chief operating officer left at the end of July, and one senior operating role is still sitting vacant while they recruit for it.
Bear point 6, new debt. A $125 million term facility, fully drawn, plus an expanded revolving credit line. Minimal net debt still means more leverage than the company carried before the deal.
Bear point 7, the real proof of whether this integration is working financially doesn't show up until the Q3 2026 report in late November. That's months away. Until then, the market is largely taking management's guidance on faith.
Bear point 8, both halves of this business lean heavily on defense budgets, which move on government spending cycles and procurement timelines that Kraken doesn't control.
And bear point 9, the move up to the senior Toronto Stock Exchange is still just a stated intention. It requires meeting listing requirements and getting exchange approval, and management's own timeline stretches into early 2027.
So the tension here is pretty clear. A company that just tripled its revenue guidance overnight, funded the deal in a disciplined way, and kept winning orders after closing, but is now digesting an acquisition bigger than its own prior size, with dilution already in the rearview mirror and real integration risk still ahead.
Exactly, milestone tracker. How do we track this one going forward?
Milestone 1, Q2 2026 results, coming August 27th. That's still a standalone pre-Covelya print, so it's our last clean look at organic growth alone.
Milestone 2, Q3 2026 results in late November. First quarter that actually includes Covelya's numbers. This is the real test of whether the combined guidance holds up.
Milestone 3, updates on that $10 million cost synergy target. Are they just talking about it or showing actual realized savings?
Milestone 4, filling that vacant EVP systems and services role, and whether any more leadership departures follow the COO's exit.
Milestone 5, the TSX uplisting process. Does Kraken formally apply and does it get approved on the stated timeline?
Milestone 6, does the combined order book keep climbing past that $327 million mark quarter over quarter?
And Milestone 7, Keep an eye on the calendar around next July when the first third of Covelya's seller lockup releases. Worth watching trading volume and price action around that date.
That's Kraken Robotics, bull case, bear case, and the tracker. A fast-growing niche tech company that just made a very big bet on itself.
We'll check back in after the Q2 print on the 27th, and again once Covelya is actually showing up in the numbers in Q3. That's order flow. Follow us wherever you're listening, and we'll see you in the next one.